All right. Good morning, good evening, good day, everybody from around the world. We're super excited to have you here today at the Stacks Ventures Demo Day event, day 2, for those who are joining us again from yesterday. I am going to be your host kicking us off today. I'm Kyle Ellicott, partner and managing director here at Stacks Ventures. For those that did not join us yesterday, we had an outstanding group of entrepreneurs who pitched in the first half of the day, ranging from all different categories of the industry. And today is part 2 of that. We've got over 10 different companies today that are going to be going one by one, presenting to you what they have been working on for the last 3.5 months and are ready to now show you and the rest of the world. So today's agenda as we kick off, we're going to do a little talk around what's happening in the broader industry of Web3, along with some insights on what's to come in the second half of the year as we just hit that halfway point thus far. We're also going to hear a CityCoins update from Patrick Stanley in the CityCoins community. And we also have a special guest who will be joining us as well in his discussion to tell us a little bit more about what he's seeing in the broader Stacks community ecosystem and also what is to come later in the year. Then we'll go through our pitches. We'll have each pitch will be 5 minutes, no Q&A, back to back to back, where each founder will present again what they have been working on for all of you to see. And then we're going to jump into breakout rooms. So if you've got any questions, you want to talk to the founders, you want to learn a little bit more, and maybe even want to go further in those conversations as an investor, we'll have breakout rooms right after the pitches for about 30 minutes where you can join each of those entrepreneurs and have those discussions one-on-one or in the group setting as well. And to schedule one-on-ones with each of our startups, whether it's in the breakout rooms today or afterwards, scan that QR code right there to get access to all of their Calendly links to be able to schedule, again, those one-on-one meetings today, tomorrow, and the rest of the week, all next week as well. And if you're out there live tweeting or sharing anything on social, we do ask that you please use that hashtag StacksDemoDay as well. Now, for those who may not be familiar with Stacks Ventures, and again, may not have joined yesterday, Stacks Ventures was founded just over a year ago by Trevor Owens, the managing partner who's out in the audience today. Shout out to Trevor, and brought all of us together as a team along with the founders and this great community. The purpose of Stacks Ventures is to build the best community for founders, mentors, and investors throughout Web3. And Trevor has been doing this since day one, and us as a team have been doing it ever since as well, continuing to grow and add as much as we can to the Stacks ecosystem. And we do this by bringing together great people, all of you and much more, along with our founders. We work with founders that are looking to solve real, tangible problems for end users. And you'll notice that in a lot of the presentations today that the word blockchain, DLT, et cetera, is not actually the forefront of their conversations, but instead they're looking to solve real problems in various industries for customers of all shapes and sizes, and build great technology, because that's what it's all about at the end of the day. Stacks Ventures, right now, we've actually expanded our initial scope when we just kicked off with a venture fund and an accelerator, the very first in both for this ecosystem. We've now expanded our offering to a pre-accelerator program where we help founders and entrepreneurs and those with just an idea to validate their product, find early product market fit. We're looking to work with over 150 companies per year. And that first cohort is already kicking off and running right now as we speak. And next, we have the accelerator. The accelerator is all about growth, fundraising, technology integration, and taking that next step in a company's journey, whether they're pre-seed all the way up through Series B or Series C, those massive growth stages. We are here to work with over 30 companies a year in that acceleration program, some of which you're going to be hearing from today. And lastly, in March of this year, we kicked off Bitcoin Odyssey, the $165 million pledge in collaboration with the Stacks Foundation, OKCoin, and about 20 plus tier 1 venture capitalists, all to help those companies in this ecosystem take that next step in scaling and potentially listing or going beyond in their growth stages. And with Stacks, we're continuing looking at more and more of how we can, not only with the technology, but also with our skills and what we bring to the ecosystem, further unleash Bitcoin's full potential. And as Trevor showed this yesterday, we've shown this and we want to show it again. This is the Stacks ecosystem at the beginning of the year, and already outdated massively because of all the excitement, all the interest in unlocking Bitcoin's full potential. This is just the beginning. Will be updated very soon this summer, and you look to see this double in size, along with new categories and subcategories to be added to this. When we first kicked off Stacks Ventures, there were just a handful of companies in the ecosystem. We funded the first 25, and now today there are well over 75, on our way past 100 companies in this ecosystem and more that are popping up every day. Now, getting started with Stacks. If you haven't, or you're not familiar with Stacks, go download the wallet or a wallet. Check out Xverse, who you're going to hear from today, or the Hero wallet as well. Make sure you buy and check out some Stacks on OKCoin. You can purchase those on Coinbase, Binance, do your own research, but there's plenty of opportunities to get involved in the ecosystem. Check out the NFTs, the non-fungible tokens, whether that's on the marketplace of Gamma or some of the others that are starting to rise up in the ecosystem. And a shout out to the CrashPunks community, also to the Stacks Degen community, Megaponts, and many others that continue to make up this ecosystem as well. And you can always buy Bitcoin domains. We all have them here at the Stacks Ventures community as well. And get yourself a .btc domain. And also try out DeFi. Something happening in the ecosystem. In our first cohort, we saw the very first decentralized exchanges. We also saw the first stable coins. And today we're going to see much more in those categories, further broadening Bitcoin DeFi as well. And always stack your stats and earn a little Bitcoin. Now, as Stacks Ventures, with each of our teams, we try to offer the best terms that we can that are also friendly to the founders and help attract some of the greatest teams. On the accelerator side, we invest up to $50,000 with no cap, meaning we come in with investors already invested or already in the open round and bring those founders and their teams into our 3.5-month acceleration program, helping them, as we mentioned, to put through technical integration, raise capital, grow, scale, and find that additional product market fit in their ecosystem or industry as well. In addition, the Stacks Foundation also contributes up to $100,000 and sometimes more in non-equity grants to help the founders that are entering in this ecosystem really have a little bit to get started and then some. Our investment thesis is quite simple. We invest in outstanding teams. Some you heard from yesterday, the rest you're going to hear from today, who can find an easy way to do something difficult. And if you want to learn more about our investment thesis, check out bit.ly/stacks.ac-thesis for the full write-up by Trevor Owens, our managing partner, and all the details as well. And I'm joined here at the Stacks Ventures team, as I mentioned, by managing partner Trevor Owens, Andrea, who's running everything you're seeing happen today. Also with our analysts, Pooji, Jacob, and Kevin, who've done an outstanding job working hand in hand with each of the companies that have been presenting yesterday and today. Now, to jump into where we are with the ecosystem. At the end of the year, I talked a lot about what had happened in 2021, but also what was to come in predictions for this year. Some I was right, some I was very wrong on, but that's what predictions are all about. Now, in 2021, we saw a rising trend that has continued in the first half of this year. And that was protocols, along with their foundations, partnering up with traditional venture capitalists to broaden their ecosystems, to put more capital into the ecosystems, to fund those initial companies and the companies that are hitting their growth stage. Now, venture capital flowing in at record rates. This absolutely happened. We went from just around, I believe, $15 billion all of a sudden to $31.4 billion invested in the entire Web3 ecosystem. That represented 5% of all capital for 2021. $621 billion was invested in all venture capital dollars in 2021. Our industry captured 5% of that. We would see the reemergence of SAFs and token launches. I was slightly right. I was slightly wrong on that one, as that has actually started to slow down here in 2022. But that security and stability would absolutely be crucial and would also look to be leveraged with Bitcoin's network, hence stacks. I was pretty right on that one, as we're going to hear from companies today. Exchanges and brands would begin to position not only their own NFT collections, but marketplaces and ecosystems. And we saw this across the board. Many of today's biggest named exchanges started launching their own NFT marketplaces, whether that be Coinbase, whether that be FTX, Binance, you name it, all created these NFT ecosystem or marketplaces. And then the brands themselves started to get involved. We saw companies like LimeWire enter in not just the NFT collection space, but also wanting to help out NFTs with artists. We're now starting to see this as a trend in the metaverse, where companies like Walmart, CVS, and also Puma and many others are starting to get into the NFT space. Bridges. We would see more bridging and interoperability across networks. Consensus mechanisms would expand beyond POW and POS to things like proof of transfer, proof of attendance, and DAOs would begin to be something we would be talking about and starting to use. Cloud computing went into full activation and acquisition mode, looking at acquiring all companies they possibly could or would in 2022. More corporates, governments, and small businesses would add digital assets to their balance sheet. I may be slightly wrong on that one. But lastly, that business models like play to earn or move to earn or X to earn would drive greater mass adoption into the Web3 ecosystem, but would also desire a greater user experience. Most of these we started not only to see in the beginnings of 2021, but now as we moved into 22, in the first 6 months, we actually saw a lot of these begin to play out or start to fade away. For instance, the X to earn movement, we saw plenty of companies, including one of ours, Forever Today, that entered in the move to earn space and drew not just thousands or tens of thousands, but hundreds of thousands of new users and new wallets and new wallet addresses and new acquirers of digital assets into the ecosystem that never would have before. So where do we go from here? What does the second half of 2022 look like? To date, on the venture capital side, we've seen $27.99, $28 billion as of last night invested in this entire ecosystem in just under 6 months, almost the amount we saw all of last year in 2021. But things have started to change. My prediction is we're going to be up right around that $40 billion mark in the second half of the year and closing it out, a 25% increase from that of last year. And as we look to the second half of this year, I think one of my first biggest trends that everyone is on the same page with is build mode has become activated. It is all about building. It is all about developing. It is all about finding new tools and fixing those that we have and improving upon them. We've seen this at almost every major phase change throughout the Web3 industry since 2008, where we've gone through a year or two of expansive growth and figuring out what needs to be built, then focusing on that development and shooting up again from there. Also, regulation. We're going to see regulation very much intensify. We're going to see more conversations. We're going to see more discussions around assets, mining, environmental impacts, energy usage, and stable coins, and much more. The SEC is going to get involved in a good and potentially an undetermined way. And we're going to see how this all works, how this all shapes and positions this industry for its next area of growth. We're also going to see some consolidation. We're going to see consolidation throughout the industry and technology. M&A, mergers and acquisition, we're going to see a record high. We're going to see that from venture and hedge funds, NFT collections, as we've already begun to see on the acquisition of intellectual property, some mergers of protocols, and DAOs. A very nascent industry at the moment, but I think we're really going to see some cool opportunities as DAOs begin to merge and collaborate, not just investors, but users and greater activity. Bitcoin continues its rise as an infrastructure and a scalability solution to be developed on. Shout out to Stacks, but without Stacks in general, I think that that is a true to form big trend we're going to see in the second half of this year. Gaming leads us forward, driving in 5 to 10 million new users and active wallets for the industry. And I hope I'm understating that. And I expect to see that double, if not triple, into the end of the year. The battle of scalability and cross-chain further continues. We're going to see more of limits tested amongst networks and opening of new technologies to improve that speed, improve that scalability, and also to grow applications. Shout out to hyperchains. And also we have the upcoming merge on the Ethereum blockchain as well. Security is absolute a must. It's no longer just about audits. It goes beyond that. How can we improve security and privacy amongst all applications? DAOs, decentralized autonomous organizations, will now begin to lay their frameworks and find new business models and use cases, along with the beginnings of on-chain reputation management, where we'll start to see DAOs be a part of people's CVs. We'll see DAOs start to take shape as more around industries, new corporations, and potentially in and around nation states. Non-fungible tokens will evolve beyond their infancy stages that we've seen in a very exciting light over the past 2 years to introduce new tooling, new infrastructure, new real life applications. Not yet ready for mainstream, but that's okay. And that's okay because we're going to see all of this happen. We're going to see all this test, and we're going to see this hit mainstream in the early half of 2023. Q1, Q2 NFTs are going to take a whole new shape than what we've seen to date in a double or tripling way than we see the industry this far. And lastly, my biggest hot take is that we begin to drop the term Web3 by the end of the year. Now, this is exciting for me because I think there's so much more that's going to be happening. There's so much more in terms of trends and opportunities and in just general development around and across all of Web3. And today you're going to hear from more companies building and challenging and pushing all of these forward. But first, I want to welcome up our two speakers today to talk to you a little bit more of what's happening in the Stacks and Bitcoin ecosystems. First up, Patrick Stanley, the community lead of CityCoins, a good friend, also a big supporter of the Stacks Ventures team, everything we do, and also Ryan Shea, the co-founder of Stacks and our latest advisor and board member here at Stacks Ventures. Gentlemen, welcome to the stage.
Hey, thanks for having us.
Thank you for having me.
Kyle, did you want me to kick off with a quick overview of CityCoins updates?
I would love it. I'm going to turn off the screen share and let you guys just be on video.
Cool. Thanks. And then I'll go into a Q&A with Ryan right after that.
Perfect.
Okay. All right. All right, so welcome to CityCoin. This will be a very brief presentation because I know we want to get to the Q&A and everything, but just want to give you guys some updates. Welcome to CityCoins. We're moving municipal governance to municipal protocols. So let's talk about what that means. But first, let's talk about just like what the market is for municipal protocols. CityCoins are free-floating crypto tokens that are specific to cities. So when you use those tokens, value directionally accrues to that local municipality. For example, in Miami, We funded about $5.25 million worth of rent relief. And that is a function of Miami Coin's mere existence, basically. So the market comparable, I think, here is the $4.2 trillion municipal bond. You can think of muni bonds as just, almost like corporate debt for cities, and maybe CityCoins closer to something like, municipal equity that is programmable. So what does CityCoins do? They give cities three things. They give cities a crypto treasury to fund growth, a governance token to align citizens and stakeholders on treasury allocation, and importantly, an application layer for developers to build city apps and services. So first, CityCoins grow crypto treasuries. CityCoins are fairly launched. There's no pre-mine, no ICO. 30% of all mining proceeds flow directly into a city wallet. So this is all the underlying crypto that is used to mine CityCoins gets forwarded there. And it can grow some pretty large wallets in the 8 figures kind of amount, which can then later be potentially controlled by the CityCoins governance token itself. The remaining 70% flows to token holders who temporarily lock their CityCoins. Locking also gives you sort of the ability to vote. And a city's crypto treasury can be reserved to be allocated for a city DAO, which I mentioned earlier. So let's talk about that. So CityCoins can function as a governance token. So you can, the current proposal is that you would be able to vote in a board, basically like a panel that makes decisions on what proposals get funded. And if you have a governance token, you can submit a proposal to get funded. So that's where we're headed right now. We hope to have the DAOs launched before the end of the summer. Right now, there's a Miami Coin Web3 dev camp going on. Just as an update, it had 500 signups, over 500 signups, and it's currently training over 100 developers, as far as I know. There's a whole application layer here with CityCoins that's really useful to know about. You can mint NFTs, you can vote, you can create proof of HODL access control, which is actually kind of interesting. You're basically like expanding the geography and jurisdiction of a city by having like a hardware actuator that allows you to enter into a room or something like that if you're holding a city's coin. You can earn rewards using credit cards, and you can mint new namespaces, which is one of the big updates coming in July. So what you're going to have is a crypto sort of like crypto namespaces for specific cities. So you can put this in your Twitter profile. You can actually use the namespaces to log into applications. So for example, you might have applications that allow you to log in with a .nyc, but not a .mia namespace. And these are not traditional DNS namespaces. These are completely decentralized user-owned namespaces. So that's basically the very quick update, and we can just jump straight into the Q&A with Ryan. I hope that was useful. Cool.
Awesome.
So yeah, Ryan, how's it going, man?
Good. How are you? Can you hear me? How's the audio?
Yeah, it's pretty good. Am I coming in okay?
Yeah, perfect.
Great. So Ryan, we're currently in the past couple of weeks, it's been very clear we've currently been entering into like a brutal sort of bear market. Kind of curious to know what's your take on that, and also kind of like maybe even before that, like what's your history with Stacks? Like how did you kind of like what's your origin story with Stacks? I'd love to like hear that all the way back from
Sure. Yeah, I can give. I'm sure a lot of you guys have heard this, but I can give the little kind of origin story. So Maneve and I knew each other from Princeton. We knew each other in two capacities. One, when I was running the entrepreneurship club, I was president for 2 years, and he was working with me on that. And I also knew him from the computer science department. So we, we're good friends and coworkers, and I was, we hang out a lot. And then years later, we ended up living on the same block, and we bumped into each other. And he was like, "Where do you live?" And I was like, "Right there." And he's like, "Oh, I live right here." And we just got drinks and caught up, and we were both kind of fed up with what we were working on, and we said, hey, why don't we just start a company together and let's figure it out. And we actually started a company, and we were working. We said, let's work on whatever we enjoy. And we tried a few things, and this is 2023, and this was the time when there was the big Bitcoin price run up to $250 after like the whole Cypriot bank seizure. And so, I had a couple of friends who were like really into Bitcoin, and they just like kept hounding me about this. And I was like, what the fuck is this? But then after them talking to me about it every day, I just like was, oh my God, this is incredible. This is like the rabbit hole goes, forever, as far deep as you can. I was like, neat. Like, I know we're working on this stuff. Like, we've got to pay more attention to Bitcoin. So we kind of got, we both got really excited about it. And at one point we decided to drop what we were doing, and we built this, like the first API aggregator for all of the exchanges, like Mt. Gox and like all the top exchanges at the time. And so we built that. It's called Coin Vibes, but we shut it down. That was our first little foray. And then we had this idea to build a decentralized internet. And that was after getting rejected from Y Combinator. And it was almost like we applied with this idea that we didn't really care about. And then like, you could tell that we didn't care about it, because like as soon as we got rejected, we were like, okay, fuck this. We've been talking about this decentralization stuff. We can build the internet in a new decentralized way. And that's where it started. It didn't have a lot of crypto at first, but then we realized that, okay, so this Bitcoin interest and this decentralization interest, like decentralized internet, like they can be combined. And we originally were like thinking about building it as like this, like decentralized DNS and decentralized social network and decentralized data layer and all this other stuff. And then we came up with this idea of launching kind of like a social network for Bitcoin. And that was the first product that we launched. It was called OneName at the time. And that was kind of the first DApp. That was the first like real DApp. And when we launched on r/Bitcoin, Patrick, you stop me if I'm talking too long. I'm giving too much.
No, I was just gonna say it really popped off. Like people wanted their names. Like
they wanted their names. Exploded. It was like, I don't remember exactly how fast. It was like 10,000 users in a day. Quickly went to 100,000 users. We got all the investors reaching out to us, like, because people were talking about the possibility of dApps. At the time, dApps didn't exist. It was just Bitcoin and payments. And people said, oh my, like the blockchain has so much potential. You can enable all these other things. I got a copy of the Ethereum white paper before almost anyone else did, before it was actually publicly released in I think it was December of 2013. And that was largely, inspired by some of the previous work on some of the smart contract platforms that were existing on Bitcoin at the time. But people were talking about like this promise and like all these possibilities. We built that DApp, we built OneName, and then people were sending Bitcoin to each other, to their names, to their usernames, and having profiles. And it was kind of like this, like the first social network on top of crypto. And then we turned it into something bigger. We were like, well, all this can become the original decentralized internet vision that we had set out to build, and that became Blockstack and eventually Stacks. Manib and I, we worked on it for many years, up until the point where it became the Stacks blockchain. We were co-founders. I was CEO at the time, and we worked great together. So we had such a great journey, and went from one thing to another, from this starting the company to having the vision for a decentralized internet, building OneName, building Blockstack, and then launching the Stacks blockchain. So that's the journey.
Yeah, I mean, I remember being really attracted to the vision of like building a new decentralized internet on Bitcoin, and it's not a small vision. That's like a very, very large vision you guys set out on. I guess like what's sort of like lessons from that time Actually, let's go back to the original question I tried to get into before.
Oh, sure, yeah.
Yeah. How are you thinking about investing in this current market? And yeah, just basically like talk to me a little bit about like bear markets investing and kind of like your sort of like.
Yeah, I'll give a couple like real quick things. So like, you know, I've been doing a lot of investing for the last several years, invested in almost 50 companies now, have 9 unicorns under my belt. I was the first investor in OpenSea, in Lightning, in, you know, in Anchorage, in CoinTracker, a lot of the top crypto companies, all billion-dollar companies now. And you know, I've been advising CityCoins. I've been advising, helping out with Alex, advising StackerDAOLabs, just kind of like really trying to help where I thought I could help the most and make an impact on a few of the biggest, like most impactful efforts in the Stacks ecosystem, whether that's CityCoins, Stacks Ventures, and Alex. And so, you know, I would say like right now, we're obviously in a market downturn. Money's going to be tight. The entire world is entering some kind of economic slowdown. Really, it's important to double down on a couple of things. You know, one, when you can get cash in the bank in terms of investment, take it. 2, really control your costs. The biggest thing there is salaries. And so being able to control salaries and control the size of your team is critical. You want to be able to last as long as possible. You want to ideally have a runway for 3 years. And you want to focus on real world impact. Ideally have customers for which there isn't correlation to the broader crypto market. So over the next 2 to 3 years, really focus on making as much real world impact as you can. Focus on sustainable protocols. Focus on things where you're driving real value to real customers. And you know, my goal for being a part of Stacks Ventures is to help with help teams with that, like help Stacks Ventures in that direction. And you know, whether that's like, hey, like, well, I need advice on like what to work on, like, or like we're struggling with this problem, like how can we make our tokenomics a little more sustainable? Like those are the kinds of things that I'm focused on. So I hope that answers the question.
Yeah, definitely. Thanks for your time. I'd say like just for those that don't know, Ryan is like one of the best sort of thinkers I've ever like in the space. He has insanely good clarity of thought. He is really good at finding a very like simple sort of solution when there's a lot of complexity, and he's like an insanely valuable sort of resource. Just like happy to have him around. So thanks, Ryan, for your time today.
Thanks,
and great story. That was really entertaining and informative. So appreciate it.
Absolutely. Thank you.
Awesome.
All right, see you, gang.
Thank you guys very much. Want to continue on, Patrick, Ryan, appreciate the conversation. Ryan, we're excited to have you aboard and excited to see what comes next, Patrick, with CityCoins as well. And Ryan, shout out to the little puppy on your screen. That was one of the coolest Zoom backgrounds, I think, or overlays, filters that we've seen. But continuing on today, everyone, from here on out, we've had a fun time. Now it's time to get serious for one slide, and that is all information provided here on is for demonstration purposes only. We make no express or implied representations or warrants as to the accuracy of the completeness of the information presented. Do your own research and make sure you check in with each and every one of these companies afterwards as well. And we are going to go ahead and jump into the pitches in alphabetical order today, kicking off first with Efani. Ladies and gentlemen, as we jump in again, if you haven't already, make sure you do schedule time and one-on-ones with each of our companies. And with that being said, ladies and gentlemen, please welcome up our very first founder, Hasib from Efani. The floor is yours.
Hello, everyone. I'm Hasib from Efani. We are a secure mobile carrier, and now we are using Web 3.0 to improve our services. So I'll start off with why we are important. Can you please hold your phone right now for a second? Once you hold your phone, I'll tell you one thing, that if someone has to get into your phone right now, there's an 80% chance they'll be into your phone within 30 minutes. So this phone that you have in your hand can be with someone within 30 minutes, all the data and everything, mostly around SIM swapping. The reason I know that because I suffered through SIM swap 4 times. For 4 times within 2 years, someone was getting into my phone over and over again. And the reason for they getting into my phone was because of my ATM startup. We built one of the largest Bitcoin ATM networks, and everyone thought they can get into my phone so they can steal Bitcoins. They didn't steal anything of that, but they steal my comfort level and everything. And while building that, we also realized that we need telephone numbers for KYC. If you give me a telephone number, I can tell you pretty much your social security score, where you live, who you live with, and much more. So if you think today, your telephone number is your social security number. We have more identities linked to your telephone number than anything else. If on one side you have an option to someone get into your social security number, on the other side you have an option of telephone number, there's a chance that you may let go of your social security number. That's how important our telephone number is. Despite that, why is this the case that they are unable to secure? We got some monopoly. There are 3 carriers. They can sell you to anyone they want at any price they want. And the only thing they'll send you is, I'm so sorry for the inconvenience. And not just that, your location is being tracked, your data is being sold, and pretty much you can be, as a SIM swap anytime you want. Every year, hundreds of millions of dollars are lost because of SIM swap attack. It was time to change that because of suffering through that. So I built Efani, which is the most secure cell phone service. Not just we guarantee protection against SIM swap, we also do not sell your data. And for God forbid, if something goes wrong, you're covered up to $5 million insurance policy. Right now, if you get hacked, you'll only receive a letter of apology. In our case, you get a $5 million insurance policy. We have been recommended by the folks who work in the companies. If you look at any major carrier right now, their C-level do not use their own service for personal reason. They use our services. If you go officially to them, they will say, use Efani, we are not secure. It turned out it wasn't just me who was suffering this problem. We're growing 3 to 5% month over month for the last 2 years without any marketing. You search online, you ask, and people are going. Not just that, we are able to retain 99.5% customers with a 45% gross margin. And 96% of people use it today. And as Ryan mentioned, we are profitable. So now why Web 3.2? Why Web 3.2 and why this is, this is a big deal? Because everyone is talking like it's a cliche to say Web 3.2. Right now, we depend on regular towers. We have to pay AT&T and Verizon a lot of money. 60% of the cost goes towards them. And now, because you have hotspot in your house, you have 5 towers, there are millions of nodes across America that are being deployed. By building our own carrier, we can roam on those networks, reduce our cost, and improve our services. By switching to Web 3.0, not just increase our margins to double, it also reduces our acquisition cost. Because when people install the nodes in their house, they automatically incentivize the people to join. And that's how we kick off our wheel. Our management team, we come from a crypto background. I'm a telecom engineer. We are YC alumni, and I co-founded one of the largest Bitcoin ATM company. We sold that. Not just that, everyone in our team has either a telecom, crypto, or cybersecurity background, and been involved with acquisitions with exits of companies. When we start raising our money, we went to our clients and we say, why don't we raise money? And 80% of the investors are our existing clients. And not just that, when we asked them again, 90% of them opted for Web 3.0 version as well. Our customers and investors are generally executives or founders of these companies. So we are closing our round. It's an equity round, maybe with the potential of having token in the future. I'm a SIBA 1, and this is Efani from Secure Mobiles. But one thing, if you remember, even if you don't like our pitch or something, please go to efani.com/docs and see what your telephone numbers are. Because again, I can give you my number to anyone you want, but you have to ask, can you give your number away to anyone you want? Thank you.
Thank you very much, Haseeb. Next up, I want to welcome Alex from Gravy to the stage. Alex, the floor is yours.
Thank you, Kyle. And it's an honor to be here. So my name is Alex Schaffhausen, and I am the founder and CEO of Gravy. I am thrilled to share with you all our creation. So the biggest problem in the music industry is that the artist earns nothing. For every 1 million streams on Spotify, for example, they get paid only $3,000. This does not even pay their rent, and most musicians have to work another job. This is just plain wrong. On top of that, there is no way for fans to invest in or share in the upside, nor do they have a say in the popular culture of music. The root of these problems is the same thing: corporate control. The centralized nature of Web2 streaming combined with the record labels make it impossible for new artists to stand out. So on one hand, Web2 streaming made it easier for musicians to distribute songs to the masses. This is a great thing. However, this came at a great economic cost for the artist. Web3 fixes all of this. Web3 allows us to create new revenue streams for everyone, meaning the artist and, for the first time, the fan. So introducing Gravy. We live in a world today where, thanks to social media, we have direct access to, well, everyone. The single missing piece is the funding and distribution relationship between the creator and fan. The social first foundation of our platform makes fans the distributors and marketers of music. We are able to monetize this behavior by issuing a token every time fans post and share music. We can literally pay our users for things they are already doing on our platform. On the musician side, our process is simple. All the artist has to do is upload their songs to our platform, just like they would on any other music platform. They don't need any crypto experience. They simply drag and drop their files, and our backend takes care of the rest. So how does that payment system work? So we have built a single staking mechanism in our token model so that when fans stream and share music, it is considered a vote for their favorite artist. By this mechanism, social tokens are distributed from the fans to the artist where they belong. Fans on our platform don't have to change their behavior at all, nor do they need any crypto experience. To start our flywheel, fans stake Gravy tokens to fund new music. Our staking mechanism is fans voting by using behavior they're already doing, streaming and sharing music. Musicians earn their protocol fee from fan staking. The fans or fan that played a key role in the music marketing can earn back a portion of the creator tokens. The musicians, they simply mint their song or album as an NFT on our platform. It is dragging and dropping audio files. No crypto experience is needed. The fans earn Gravy from their social behavior, or they can buy Gravy tokens with Bitcoin, increasing the value of our flywheel. The fans' Gravy tokens get paid mostly to the musician or get circulated back to the fan supply side. This completes one lap of our flywheel, which will circulate for all eternity. So we will earn money on all the transaction costs associated with our flywheel, 11% on the primary and 1% on the secondary. At only 500,000 users, our projected annual run rate is $40 million. The best part of our system is that the artist will earn 5 times more on Gravy than from traditional Web2 streaming services. So can we do this? The answer is yes, we already are. Our foundation is set and we are ready to start scaling immediately. We have over 11 million tracks in our catalog and over 100,000 people on our wait list. Our iOS is launch ready and our Android is in beta. So we will own the entire vertical, from NFT minting to distribution to music streaming. We can even help with events and merchandise. With our complete vertical integration of social streaming and Web3, we can leapfrog the outdated Web2 business models. So we are disrupting both streaming and funding. The global music streaming revenue last year was $9.8 billion. The total size of the music industry market is $25.9 billion. Fan funding and engagement takes us beyond traditional music streaming. We are a decentralized distribution system and social media network here to release you, the artist, from corporate control and set you free. A brief look at our landscape. You have Web 2 streaming services like Spotify and others, which are basically a well-designed skin on top of a music library with nominal social features, if any at all. On the Web 3 side, most do not have a catalog, right? You have Royal, Sound XYZ, and LimeWire. They currently focus on minting and collectibles. While that's a great first step for everyone, there is no distribution or streaming. You also have Audius, which is great. However, their catalog is rather small and they do not have a direct mechanism in their token model to bring royalties to NFTs. We do. So here we are on the far left, Gravy. We own the entire vertical and we are bringing the best of Web 2 and Web 3 to bring a unique and defensible consumption experience. So our founding team both did time at Stanford. I went through a graduate artificial intelligence program there, and Brian did his undergraduate degree there. We have known each other for over a decade. Our investors are influential Twitch streamers and YouTube stars, and their combined social following is 100 million fans. Our advisory board has over 150 years of experience and has helped us with key partnerships in the space. We are raising and are looking for partners who want to be at the forefront of entertainment, social media, and crypto. If you are interested, please join us in our breakout room or email me. My contact is on the screen. Thank you so much. And Kyle, back to you, sir.
Thank you very much, Alex. Appreciate it. And next up, I want to welcome John from NeoSwap. John, the floor is yours.
Okay, great. Thank you, Kyle. Okay, I'm Dr. John Ennis. I'm the CEO of NeoSwap. I'm a PhD mathematician who has previously built a successful enterprise AI business. And I'm here today to talk to you about my life's mission, which is NeoSwap, where we are engineering perfect swaps by design. So when you look at, at human history, humanity has always advanced when a new technology would unlock liquidity in new ways. So if you look at this list of inventions, there was always some new behavior that was made possible by those inventions. And today, we're adding NeoSwap to that list. The world is missing trillions of dollars of economic activity because most assets are non-fungible and illiquid. If you think about, if you were the owner of the sports car and you wanted to buy a barrel of rare whiskey, what you have to do? You would have to sell your sports car, hope to find a buyer, then take that money, and hopefully the rare whiskey is still available. The thing is, this way of conducting commerce is extremely inefficient, yet we just take it for granted. We're like fish. We don't realize the water is wet. So is there a better way? So let's ask ourselves, how do we create an economy in which non-fungible assets flow freely? And to understand why I'm interested in this problem, we need to go back to my childhood. My first experience with non-fungible assets, although I wouldn't have called them that at the time. When I was 12, I came downstairs. My parents had a big box labeled surprise, in which all of our Christmas presents were in. And my father, who's a famous scientist, he thought it would be kind of a fun social science experiment to see what would happen if us kids picked presents at random, unwrapped them, and swapped them amongst ourselves. And it was kind of fun, and sometimes it was honestly a little bit cruel. But when you look at this picture on the bottom right, this stock photo, I have a memory from childhood, almost exactly like this, where I had a doll, my sister had a video game, and my brother had some Legos. And I remember drawing a picture and showing them, look, if we can just do this three-way swap, we'll all be better off. So as I grew up, I kept working on this problem. I should say my 2-year-old daughter brought home a sickness, and I unfortunately have a sore throat today. So anyway, I always was working on this problem in the background as I grew up. I got my PhD in math. I did my postdoc in computational neuroscience. I became a market research consultant. I founded a successful company, but I never gave up on this problem. And in 2017, I wrote the early version of what we now call the NeoSwap algorithm. And you might ask, well, why didn't we launch a business in 2017? And the answer is that we couldn't scale it. There's too much friction in the real world. And in Web 2, there's all these barriers to entry. You're inside somebody else's marketplace. So the big breakthrough for us, just like actually GPS made Uber possible, for us, smart contracts make this new behavior, this complex swapping behavior possible at scale. So we're at one of these pivotal moments in human history where something that was previously impossible, but would have unlocked a lot of value, suddenly becomes possible. And there's going to be a massive value release. Now, when you look in the NFT secondary markets, you see there is a huge need for this sort of technology. 65% of NFTs on the secondary market never sell. Even though this is a big market, last year was 18 billion, it's projected to be 80 billion by 2025. There's a liquidity problem. And this is one of the reasons people don't buy NFTs. They're afraid they won't be able to sell them. So by allowing NFTs to move around with low liquidity, we provide NFTs with liquidity premium. And we don't just unlock value in the current market, we create a more valuable market in general. So here's an example of a real swap that happened on the Stacks blockchain using our platform. And so what's going on here is everyone is benefiting from this trade that no human could find. This is an impossible trade, really, from a historical perspective. Tian is giving away 2 NFTs that she doesn't care about, and she's getting an NFT, and she's actually getting paid to get an NFT that she wants. And so all of this value is being created, and we're up here capturing some of it. So we make money on every one of these swaps. Early feedback has been excellent. This user is a hip hop artist, actually. He's so excited about what we are doing. He made a hip hop song about us. I can play it for you in the breakout room. He said, if you're not NeoSwapping, you're missing out big time. We've seen encouraging early traction. We're seeing 20% week on week user growth. And I should say we have actually quite good retention using this innovative party format. Now, if you had asked me, like, what's my biggest surprise since getting into this? We started doing these parties with 10 to 20 people because we need data. We needed data to train an AI. But it turns out these parties are super fun. And there is some social need that is being met. If you think about it, again, in human history, social and economic activity have always overlapped. The fairs would happen in the village market, right? That's been lost with Web 2, and now we're bringing it back with these parties. So these parties, we can talk about how to scale them. We can be doing thousands of parties at the same time. We can talk about that in the breakout room. But we are using that to collect extremely rich data. And then behind the scenes, we're training our AI to recommend swaps outside of the parties. So we have a great team. I'm joined in this endeavor by my director of technology, my head of AI of my other company. The 3 of us have worked together for 2.5 years. We love working with each other. I would say both these guys are geniuses. My other company is bootstrapped, so we're very well prepared to deal with an economic downturn. We're very good at running efficiently. So we're going to be full-time on NeoSwap as of July 1st. And then we've hired a project manager from IBM, crypto native VC, an NFT artist and crypto educator, and Dr. Ali Haider-Ozer, the world expert on electronic marketplace design, is joining what is already a very strong technical team. And I would say we are certainly the best team in the world to bring this product to market. We have a top team of diverse advisors. And what we're doing is we're creating this new economy. So a new economy powered by NeoSwap is being born. This is a parallel economy to the centralized markets. But the total addressable market in the end here will be all non-fungible on-chain assets. And as more non-fungible assets come on-chain, this will become $1 trillion market. So we're starting here on Stacks. We'll be live on Solana in a few weeks. Then we'll be live on Ethereum later this year, moving through other chains. And in the end, we will have a cross-chain platform where NeoSwap is powering a circular smart economy running on Web3. So invest in NeoSwap. We actually just last week opened the first tranche of our seed round. We'll open the second tranche when we're live on Solana and the third tranche when we're live on Ethereum. So that will give us 3 years of runway. So please come to the breakout room and talk to me if you'd like to participate in this new economy that's being born.
Thank you very much, John. Next up, I'd like to welcome Lewis from Ryder. Lewis, the floor is yours.
Well, hello there. My name is Lewis, and I'm the co-founder of Ryder. Today, I want us to focus on our Web3 consumer. The next wave of crypto users are changing, and we can see it. Let's take a particular look at Teflon. Teflon first bought his crypto in 2020. He went into NFTs in 2021 and owns about $3,000 worth of NFT. Teflon is not really fond of DeFi, but cares a lot about art, culture, and community. Teflon wants real-life social interaction. And we can see this major trend in the changing landscape of crypto users. They're starting to use NFTs as access pass for events, status symbol in real life, and they're even integrating NFTs in their healthy lifestyle. But there's a major challenge. None of the wallets today are designed for these use cases. I mean, we all leave our hardware wallets at home because we're afraid to lose it, and we barely use them because of the current user experience. We're going to change this. Introducing Ryder, the world's first social wallet, bringing Web3 in every aspect of our life. MetaMask unlocked the adoption for end user online, Ryder will do the same by opening the floodgates for thousands of startups to build Web3 into all aspects of our physical interaction. By embedding your identity with short wallets technology, or what we call NFC, in hardware, we're bringing your on-chain assets in the physical space. With Ryder, you can use your identity or NFT to enter a space. You can tap to send a secure transactions. And not just that, you can also recover your assets in the case of loss. Now, we have a big thesis when it comes to the evolution of crypto wallets. Today, for example, we have hardware wallets used to store your life saving. They opted for security and designed for infrequent use. And we also have software wallets such as Hero or MetaMask used for logging into Web3 application, which focuses on usability but traded off security. Ryder is pioneering the next generation of wallet by combining usability and security and bringing crypto in every physical interaction of our everyday life. Now, the hardware wallet market is expected to reach $1 billion by 2028. And not just that, MetaMask actually had a 42% increase in the last 4 months, and it's currently one of the top Web3 applications with their 30 million monthly active users. Now, as a hardware and software company, we pull in various revenue streams. We retail the Ryder device at $299 with 63% profit margin after operations. Second, we sell Bitcoin domain names at $5 with a projected $500,000 sale in the first year. We use this as a top of funnel. Lastly, we also take transaction fee just like MetaMask and other software wallets. But not just that, wait. I think this is everybody's lucky day because this is the first time that we're going to unveil one of the biggest partnerships that we had at Ryder. We actually signed a deal with NXP Semiconductors. If you're not familiar with them, they're a spin-off from Philips Electronics, and they're the one who invented NFC alongside Sony. They brought us Apple Pay, Android Pay, and contactless payment to other high-end devices. Together with NXP, we're going to bring frictionless experience to crypto. So we launched 3 prototypes since our inception. We also have the Ryder OS simulator available on desktop, and you can download our firmware for Mac, Windows, and Linux. We also closed a deal with CityCoins to launch their namespaces for Miami Coin and New York. Now, our team has an 80+ years of combined knowledge from crypto product design to mass consumer hardware production. Now, as we're talking about a device that will bring crypto to the next 100 million, it is essential to be human-centered design. That's why we have Kiki and Toms, who are human-centered designer and engineers coming from companies such as Aston Martin, Land Rover, and Tate. For Ryder's architecture and hardware driver software, we have John and Enzo, who work on mass consumer markets from Philips, Shell, and NASA. And to put a cherry on top, you have me, Marvin, and Fraser, who are known for stellar contributions in the Stacks ecosystem, from the Stacks blockchain improvement proposal, community building, growth, to advising teams on Stacks. We're betting big on our thesis when it comes to the evolution of crypto wallets, because we've been in this space for quite a number of years, and we work with top-tier projects such as OpenSea, Stacks, and Android. We're racing. If you believe that now is the time to focus on the user level in order to bring crypto to the next 100 million, come join our team, our community, and together we can bring crypto to everyone. Thank you.
Thank you very much, Louis. Next up, Orlando from StackerDAOLabs. The floor is yours.
Thanks, Kyle. I'm Orlando Cosme, and I'm the CEO and co-founder of StackerDAOLabs, and we're making DAO setup as easy as a few clicks of a button. The modern corporation can trace its roots back to the 1800s, when 2 legal innovations, the ability to quickly register a corporate charter and limited liability, helped to usher in new ventures, sparking the Industrial Revolution and modern-day capitalism. And we're now at the advent of a new digital revolution, where decentralized autonomous organizations, or DAOs, are allowing communities and users to participate in governance and economics that were typically reserved for upper corporate management and early private investors. presenting the first major paradigm shift in coordination since the Industrial Revolution. And DAOs currently have a wide range of use cases, managing over $11 billion in assets, including DeFi replacing traditional financial services, grant-giving DAOs serving the public interest, service DAOs replacing freelancer agencies, investment DAOs replacing investment funds, and many other. And while I can currently go on, say, LegalZoom or Stripe Atlas, and with a few $100 and a few clicks of a button, easily form a corporation, does anyone here know how to form a DAO? So DAO founders first typically have some sort of general confusion given the wide range of DAO tools out there. Then there are major legal compliance hurdles. And finally, unlike traditional corporations, there's a technical implementation with DAOs because they run on smart contracts. I've spoken to over 60 potential DAO founders, and their biggest pain with DAO setup is legal and compliance. And this makes sense. DAOs raise a wide range of new and complex legal issues, from entity formation and liability, which is especially important with DAO class actions on the rise, securities laws issues if the DAO has a token, especially with the SEC almost doubling its crypto enforcement division, and taxes, with tax authorities taking a keen interest in crypto in the last year or two, creating a major problem for DAO founders who are forced to spend hundreds of thousands of dollars in several months to launch legally compliant DAOs. Enter StackerDAOLabs. We're providing a 100x improvement for DAO setup and management. And we're doing so by building a one-stop shop to launch and manage compliant DAOs. We're building our StackerDAOs no-code generation and management platform that will provide legal tech tools and also your DAO's technical implementation built on our StackerDAO protocol, a smart contract DAO operating system on stacks for modular and flexible DAOs. For our legal tech tools, DAOs will be able to avail themselves of legal benefits and meet compliance requirements. First, we'll be building legal tech templates for DAO use cases that necessarily have to meet certain regulatory obligations. And we're gonna actually input those requirements into the smart contracts themselves. Then we're gonna allow DAOs to easily form a legal wrapper and have access to a bank account so that they can partake in off-chain activity. Finally, we're assisting with operations compliance, including automating securities, investment advisor, and tax filings. On our platform, you'll be able to deploy your DAO smart contracts and form your legal entity with a few clicks of a button. Then your DAO members will be able to submit proposals, vote on proposals, manage your DAO's treasury, and receive operations compliance assistance. And we're the only project that will be offering this robust amount of legal tech tools while owning our own protocol. The latter is important because it allows us to pretty easily and quickly create new templates for varying different DAO use cases, which is especially important given the fact that DAOs are a nascent industry. And so different structures and best practices may shift quickly. For our revenue model, we'll first allow people to form a simple general template and then charge a subscription for our legal tech tools and treasury management solutions. And then for those legal tech templates, similar to a platform like AngelList, we will charge a percentage of the funds raised from those templates. We're leveraging our first mover advantage in the Bitcoin ecosystem to launch a pipeline of prominent DAOs on stacks. We're actually launching our private beta early next week with Megapon, the largest NFT product on stacks. And we're doing it to kick off NFT NYC. In addition to Megapon, we're launching other DAOs, including other NFT communities, metaverse ecosystems, DeFi projects, a sustainable Bitcoin certification protocol, on-chain real estate protocols, a major university alumni investment fund, and many others. Then we're going to tap into native Bitcoin liquidity by shipping features that will allow potential DAO members to fund their DAOs with native Bitcoin by simply just executing a Stacks transaction and sending their Bitcoin from their ledger or whatever their favorite wallet is to an address. Then we'll go multi-chain and position us perfectly for when DAOs start replacing traditional corporations. And we're the perfect team to tackle legally compliant DAOs. I'm a lawyer by background, and most recently was an attorney at Gunderson Detmer, the law firm that has represented the most amount of venture capital dollars raised since that metric has been measured. Before that, I was a securities litigation and government enforcement attorney at Sidley Austin. I received my law degree from Northwestern, and before law school, I was an interest rate trader on Wall Street at Citigroup and received my bachelor's from the University of Pennsylvania. My co-founder and CTO, Ryan Waits, is a full stack dev and was previously the head of engineering at Rabbit Hole, the most prominent learn-to-earn platform in Web3. He has a year of Clarity experience and over 3 years of Solidity experience, which is perfect for when we go multi-chain, starting with EVM chains. We're raising a pre-seed round of. We're looking for investors who believe that DAOs are the key to unlocking the ownership economy. If that's you, make sure to stick around for our breakout room after. And I look forward to speaking with you. Thanks.
Thank you very much, Orlando. Next up, Russ from Stats on Chain. The floor is yours.
We have Sir Jonathan coming up first.
My apologies. Stacks Degen, Jonathan, Sir Jonathan, Stacks Degen, the floor is yours.
Thank you very much, Kyle. Hello, everyone. I'm Sir Jonathan, CEO of Stacks Degens, and today I'm going to tell you how we're going to take blockchain gaming to the next level with the first multiplayer development toolkit. The problem is that game studios are struggling to adapt. They recognize the opportunity of play-to-earn gaming, but lack the knowledge and tools to get started. Game developers are not blockchain developers. Play-to-earn comes with new challenges and risks, and there are no existing tools or SDKs for this new environment. These are last year's most popular games: Fortnite, League of Legends, Apex Legends, and Call of Duty Mobile. All of these games have one key thing in common. Do you know what it is? All of these games are multiplayer. In fact, 65% of gamers play games primarily with others. And so developing a multiplayer game for blockchain has unique challenges. This is how multiplayer gaming works. You have matchmaking. You need to use player data to match players of similar skill. Then you have the game lobby. You need to allow players to choose their character, choose the assets they want to play, make wagers, and so on. Then you have the actual game. Once the multiplayer aspect is set up, you have players competing inside your game. And finally, after the game is complete, you have the winners and losers, and you need to settle the data back to the database, or in this case, the blockchain. So game studios today don't have the tools for everything except their actual game. This is the main thing preventing lots of game studios building multiplayer experiences from entering the blockchain era. Introducing Stacks Degens, the toolkit for game studios to build awesome multiplayer on-chain gaming experiences. We provide matchmaking, game lobbies, and on-chain settlement. We want to eliminate the ping pong between servers and blockchain to make gaming efficient and secure. Our key features include a blockchain SDK, smart contract templates, decentralized storage, allowing players to bet NFTs and Bitcoin, and providing verifiably random on-chain rewards. Here's our proof of concept. Launched in December of last year, we introduced the first play-to-earn game on Bitcoin. It's a racing game in which you can customize and race your NFT, and players can earn rewards from lobbies and races. Also, we've generated over $60,000 in revenue. Here's how it works. You come to our website and connect your wallet to get matched with a player to race. You enter into a game lobby to choose your map, select your race car, and place your bets. I mean, our game is awesome. It's really fun and even addicting. You should try it at stacksdegens.com. The result of every race is settled on-chain. Players never have to worry. They know their data is secured on-chain. We've even built the first of its kind on-chain loot boxes. Almost every game today uses loot boxes. The difference is that ours are verifiably fair and on-chain. Game studios have told us they love this feature, and this is why we've been able to get traction and sign partnerships with some amazing game developers. Gaming is a massive market, with over 10,000 studios worldwide and more than 150 billion in annual revenue. Being the toolkit for multiplayer on-chain games gives us a massive slice of this pie. Our business is simple. We take a 3% protocol fee from transactions and a fixed fee of 30 cents for on-chain settlements. Compared to our competition, we are the only ones focused squarely on the multiplayer use case, and this focus gives us a massive advantage. All of this while paving the way for Bitcoin to enter the GameFi space. I am a serial entrepreneur, and I'm joined by an amazing team of engineers with a diverse background across the game development stack. We built the first play-to-earn game on Bitcoin, and we will continue to be pioneers capitalizing on this massive opportunity. We're raising for our pre-seed round. We're looking for investors who can help us get exposure, secure partnerships, and share their expertise to make us more successful. If you believe in the future of blockchain gaming, send me an email or meet me in the breakout rooms. My name is Sir Jonathan, and we are Stacks Degens.
Thank you very much, Sir Jonathan. Next up, Russ with Stats on Chain. The floor is yours.
Hi, I'm Russ. I am CEO and founder of Stats on Chain, and we're building Wikipedia for the new financial system. So once in a decade, we have a paradigm shift. Web 1 brought us open, accessible communication with anyone in the world. Web 2 puts collective knowledge online in searchable and structured way. And Web 3 shifts world's financial system on-chain. And as email and Wikipedia open access to the information on the internet as we know it, Stats on Chain is going to open financial data to everyone. So in today's financial system, we have currencies controlled by states and financial information controlled by banks and other institutions. In the new financial system, we have currencies controlled by communities and financial data controlled by no one. It's open on the blockchain. The way it's going to change our lives, it's hard to assess, but for individuals, it's going to change how we think about education of our kids, how we pay taxes or buy movie tickets. For institutional players, the changes are going to be more drastic. Fraud protection has to be on a completely new level. Traders will have to process large amount of data from the blockchain in order to react to the markets where every single move is visible. All those personas need high quality, real-time financial data from the blockchain. But is it easy to get? Unfortunately, no. Blockchain is quite complicated. Ethereum alone deploys more than 10,000 contracts per day. And it's a variety of contracts. NFTs, swap pools, DAOs. The innovation doesn't stop today, so the list keeps growing. Building expertise in-house to contain this complexity, even for a large company, is close to impossible. That's why Stats on Chain is an open platform where we rely on the expertise of the community to contain this complexity. This is the platform where anyone can collect, visualize, and share data from any blockchain. Right now, customers can use SQL, very common language for querying the data, to build charts and dashboards on our platform. But in the future, they can use building blocks developed by our community to achieve exactly the same result without writing any code. And this approach works pretty well for us. In few months, without any formal campaign, just few tweets here and there, we were able to reach to more than 1,000 unique page views per week. Our community created more than 400 charts, and we served more than 300 SQL queries per hour. And this is just a Stacks blockchain. The market size for this opportunity is quite substantial. Financial analytics tools market alone was $8 billion 2 years ago, and in 5 years, it's expected to reach $27 billion. Financial media market size is $19 billion extra. So how do we do this? Stats on Chain unlocks new form of collaboration for user-created financial content. We extract data from any blockchain, currently Stacks, then Bitcoin, Ethereum, and others coming next. Customers can track data with their real-time dashboards. They can share data with community or embed this data to any website or service. As of competition, we have a full feature set to allow trader or investor to make informed decision on the blockchain. Dune Analytics, for instance, has user-generated content as well, but they don't have API or notifications, which is essential to give a trader the chance to react to opportunities on blockchain as those expire quickly. Nansen and Chainalysis don't rely on user-generated content, and it's going to be a problem for them long-term as the complexity of blockchain keep increasing. And Dune Analytics initially didn't have user-generated content. They found that the adoption was sluggish, so they pivoted to this new model. Both Nansen and Dune don't support Bitcoin, ignoring the most valuable blockchain out there. Our business model is multi-tier. For free tier, we have advertising. For more sophisticated customers, we have subscription, which enables Pro Tools, notifications, and API. And for enterprise, we have a separate custom fee table. We have a strong team. I'm Russ. I'm an engineer with a lot of experience building large data systems for big tech companies. Carl is the data science and AI expert. And Claudia Anatoli is a leader who helped to bring the second Australian unicorn to the current state. We're raising, and if you want to help us to open up financial information to everyone, let us know. Thank you.
Thank you very much, Russ. Next up, Pete from Swapi. The floor is yours.
Hi guys, it's great to be here. Thanks so much. My name is Pete Harroyd. I'm the CEO and founder of Swapi. And between me and my founding team, we have over 100 years experience within the loyalty and rewards industry. And we're on a mission to fix the loyalty industry. The loyalty card industry is dead. Consumers no longer want to be locked into brands. They don't want to have blackout dates on rewards. They don't want to be forced to spend with the same brand again and again. And they don't want to have spending limits to get rewards either. And consumers no longer redeem their points. There's now a minimum of $360 billion worth of loyalty points sitting on company balance sheets globally, showing that loyalty points are no longer seen as a valuable reward. And brands are desperate to remove these points off the balance sheet to avoid the financial liability. And so the symptom of this is expired points. And there's not one person on this entire planet who likes to have a reward taken off them once they've been given it. And this can seriously damage the relationship between brands and consumers, meaning consumers no longer see the value in using their loyalty card. So Swapi solves this issue for brands. And we allow brands to offload their unspent points so consumers can consolidate multiple balances in one place. And then the consumer can redeem the points for Web2 or Web3 rewards, such as merchant exclusive, cryptocurrency, etc., which helps brands ease their way into Web3 as well. And our product is already live in the UK and since January, and we have over 20,000 users on our app already. And we've got over 1,000 brands and merchants connected into our app, offering our points currency called Swapi Points as a reward. And we're in negotiations with 5 top loyalty programs in the UK about integrating their points into Swapi to help them lower their balance sheet liability as well. So Swapi is multi-industry. We even allow SMEs to onboard themselves via a self-serve portal, which allows local merchants to become part of a national and global loyalty coalition. And our marketplace allows brands to offer Swapi points on purchases using frictionless methods such as card linking and open banking. And consumers then have the choice of where they want to swap these, whether that be for merchant rewards, Bitcoin, and soon NFTs as well. So given that we've already got a successful product in the UK market, we're now looking to Web3 to accelerate loyalty and Swapi 10x. So imagine a world where points will never expire, and for every single point that you earn, you can still spend it. This is next generation Swapi. So the DeFi infrastructure will give Swapi rocket fuel for growth. And so building on Web3 makes our model even stronger. And we plan to migrate all of our Web2 Swapi points onto Web3 tokens, easing brands and consumers further into Web3 without having to explain the complexities of blockchain. And so our universal token will be fully interchangeable between brands and industries, allowing peer-to-peer swapping, gifting, and it'll give users that all-important asset that will grow over time. And for brands, it means no more balance sheet liability, no more expired points, and the ability to set protocols to ensure they still have some control over the competition. And our business model is twofold. We charge a SaaS-based subscription fee to brands with loyalty programs and a subscription plan model for SME merchants. And we also take a commission on transactions, which is on average 5%. And we have a team of experts on board. I've got over 20 years experience in the loyalty industry, having worked for some of the biggest names across the UK and Australia. Chris, our co-founder and CTO, has over 30 years experience in the rewards tech industry and has worked with Apple, Tesco Bank and other retailers to build their reward platforms. And we've recruited industry experts such as our head of growth, who comes from Awin, one of the world's largest affiliate networks, and our finance director, who's a qualified chartered accountant with experience working at Baker Tilly. And alongside these guys, we have an expert growth hacking team and a strong sales team, all with relevant experience as well. And we're bringing to market a US-based team in Q3, which will help us grow our offering across the US, starting in Miami. And in terms of competition, we're really, really unique. So no other business is combining all components like Swapi to give a 360-degree solution to both brands and consumers. Lolly in the US and Mode in the UK use affiliate links to offer Bitcoin on transactions, but neither of these businesses have the full service loyalty features like Swapi has. And in the US, there's Back to work with enterprise businesses on crypto-based loyalty programs such as Starbucks. And then there's Stowcard, which is simplistically a loyalty wallet. And that business actually sold recently for £100 million. And none of these businesses offer the DeFi or token capability which Swapi is bringing to market. Therefore, we're really uniquely placed right now to offer both Web2 and Web3 customers the holistic loyalty solution without excluding any target groups. And we're raising a minimum of to grow our business at pace and enter new markets. And we've already got committed. And we'd love to talk to anyone who's interested in coming along our growth journey with us. Please come and talk to me and my co-founder in the breakout room later. Thanks very much.
Thank you very much, Pete. Next up, Bowtie Mooney with Syvita Mining. The floor is yours.
Thanks, Kyle. Hi, everybody. My name is Jacob Cantu. I'm the co-founder and CEO of Syvita Mining. We're building on the Stacks blockchain. Stacks recycles Bitcoin's proof of work and unlocks its potential by enabling Bitcoin DeFi. Now, stacking, which is one of the core functions of Stacks and a critical element of its novel proof of transfer consensus mechanism, delivers a native Bitcoin yield directly to holders that lock up their stacks. This foundational primitive is Bitcoin DeFi. It exists today, and it's just the beginning. Over the next 2 years, Stacks will fully unlock native Bitcoin DeFi, and we expect this to be a $100 billion to $200 billion market. Now, imagine trying to access a Bitcoin DeFi portfolio today. First, you have to determine how you want to allocate your capital across a variety of different protocols. You have to purchase, mine, or otherwise access any associated tokens. You have to go to each protocol's user interface and stack, stake, or otherwise deploy your capital. You have to manually track when your rewards become available. You have to remember to claim those rewards, and so on. Given the nascent and disjointed nature of the current ecosystem tooling today, managing your portfolio is a massive hassle. And it will only become more difficult as more protocols are added and complexity increases exponentially. What we're building are tools and services that will make portfolio management as simple and easy as 3 steps. Connect your wallet, fund your portfolio, and watch it grow. At Syvita Mining, our experience building in this space over the past 9 months has made us acutely aware of these challenges and pain points. We see an opportunity to build a platform to onboard the next 1 million users to Bitcoin DeFi. We started by building tools and services around CityCoins. These are the largest and most promising Bitcoin DeFi protocols to date. CityCoins create a new funding mechanism in an open source ecosystem of developers for the world's greatest cities. They've already generated treasuries of up to $50 million for Miami and New York City. And through stacking, these cities now have access to native Bitcoin. There are over 12 startups currently working to build utility for CityCoins, and the city of Miami has adopted Miami Coin and already used some of their funds. Now, over the next 2 years, we expect there to be numerous new CityCoin launches, and each new launch will attract new Bitcoin DeFi investors looking to access their own city's coin. Without improved onboarding platforms like we're building at Syvita Mining, many of those new investors will not take the leap into investing. Our simplified access and management tooling is critical infrastructure for the success of CityCoins and Bitcoin DeFi overall. Our success with CityCoins mining pools has proven demand for simplified management solutions. Our team has directly managed over $7.5 million worth of assets. We've generated over $150,000 worth of revenue. We've helped 1,100 unique users gain access to CityCoins, and we've helped thousands more manage their portfolios with our tools and services. In terms of business model, we take a fee on all mining volume, stacking rewards, and robo-advisor AUM. We estimate that the Bitcoin DeFi market is $100 billion minimum. And when looking at asset management software in the Ethereum DeFi ecosystem as a proxy, we see a potential market of over $15 billion for infrastructure like we're building on top of Bitcoin. Lastly, we see over $1 billion that we can tap into from CityCoins mining volume and market cap over the next 12 to 24 months. In terms of expansion, we're looking to tackle stacking. Stacking allows stackers to earn a native Bitcoin yield, and this is proven product market fit, having achieved over $1 billion in total value locked at peak stacks prices. Now, by building a Lido-esque protocol around stacking, we can develop a product that delivers a non-dilutive auto-compounding yield to stackers while also giving them liquidity through a staked stacks token. This is a massive and overlooked opportunity in the stacks ecosystem, and we can use this model to rapidly bootstrap revenue. As well, our team's experience and track record makes us well-positioned to build this utility. Additionally, we're also working on a non-custodial stacks mining pool that we believe complements our super stacking protocol well. Syvita Mining is the right team to build this critical infrastructure. We have deep traditional finance and Web3 knowledge and experience. We've been building in the stacks and CityCoins ecosystems for the last 9 months, and we pioneered the first CityCoins mining pools. We're raising and we're looking for partners that want to expand Bitcoin DeFi across the globe. Join our breakout room and let's build Bitcoin civilization together. Thank you.
Thank you very much, Jacob. Next up, Ken from Xverse. The floor is yours.
Hey everyone, I'm Ken, CEO of Xverse. We're the #1 mobile wallet on the Stacks network. Today, I'm going to share with you how Xverse is not only going to become the #1 wallet for Bitcoin, but the #1 crypto wallet. Web3 today is dominated by Ethereum, with a large number of apps and about 30 million monthly active users on MetaMask, the most popular Ethereum wallet. With a 200 billion market cap, Ethereum has 200 billion worth of assets and apps. Bitcoin, on the other hand, is more than double the market cap, but has very few apps. With the launch of Stacks just over a year ago, this dynamic is about to dramatically change. Xverse is the key that will unlock the $600 billion of Bitcoin onto Web3. Stacks is the programming layer of Bitcoin and powers Web3 applications such as DeFi, NFTs, and much more on top of Bitcoin. Stacks is the largest Bitcoin developer community by a long shot. And with initiatives like Bitcoin Odyssey, it's also bringing in the most capital for teams to build on Bitcoin. As you're seeing today, there's a vibrant community of top-tier founders and investors who see Stacks as the future of Bitcoin. Xverse is the gateway for every user to access all of the Bitcoin Web3 apps built using Stacks. Currently, we're the only Bitcoin Web3 mobile wallet, with desktop support coming later this year. Right now, you can use Xverse to manage your Bitcoin, Stacks, SIP10 tokens like Miami Coin and NYC Coin. You can collect and transfer your Bitcoin NFTs. You can grow your assets by earning a yield through stacking with Xverse Earn. And most importantly, Xverse App Browser connects to every Bitcoin Web3 app. Through these apps, users can mint and trade NFTs on marketplaces, swap tokens through decentralized exchange networks, invest in DeFi, and much more. Soon, you'll also be able to send and receive NFTs in Xverse using Bitcoin addresses. And we're working on the ability to mint NFTs using only Bitcoin, making these the first authentic Bitcoin NFTs. Huge unlocks are coming to Stacks, such as hyperchains and native Bitcoin DeFi protocols. These will increase confirmation speeds, throughput, and enable features like atomic swaps from Bitcoin to Stacks assets, or Bitcoin collateralized loans and stablecoins. These all require a wallet like Xverse. Today, Xverse has over 50,000 downloads and over $8 million of user funds in Stacks locked and generating a Bitcoin yield. As the key to unleashing Bitcoin onto Web3, we have many revenue models available. We want to aggregate decentralized exchange networks to provide users with the best execution prices and take a fee. To give a perspective, MetaMask, with its 20 million monthly active users, generated more than $30 million from a 0.3 to 0.8% swap fee in December of last year alone. We can also take a fee as the fiat on-ramp by offering quick and easy ways to purchase crypto at the point of use. We can provide registration services for a decentralized identity powered by Bitcoin. We can take a fee on Xverse Earn, and we can provide custody services for institutions. Existing Bitcoin wallets are focused on the store of value and payment use cases. None of them have been interested in expanding into Web3 using Stacks, and they do not provide good user experiences. There's a huge gap to fill, and Xverse is leading the charge. Xverse has been live on Android and iOS since Q3 last year. We launched the mobile dApp browser in Q1 this year and plan to launch on desktop as a browser extension in Q3. We're also planning the launch of in-app native Bitcoin swaps and Lightning Network integration later this year. In the coming year, we want to onboard at least 1 million users. Our goal is to bring Web3 to Bitcoin users by building a Bitcoin-first wallet and integrate seamlessly with Stacks. We want to provide simple user experiences that work for everyone and not just crypto enthusiasts. We believe with Xverse as the key, we will unlock the true potential of Bitcoin. Currently, we have a team of 8 talented individuals with a diverse background. As the founder, I have a background in engineering. I started working in the Stacks ecosystem very early on and led development of the first Stacks wallet at Hero PBC. And generated enough revenue for several years of runway at our current burn rate. We're raising an additional. We want to double our team this year and grow aggressively. We're looking for strategic investors that can help Xverse get to the next level. If you're interested and want to help us reach our goal, please join me in the breakout room. Thank you.
Thank you, Ken. Next, Adam with Zeer.
Hello, I am Adam David Jones. I am the founder and CEO of Zeer. Zeer is the next generation of personal and public safety. 6 years ago, I was violently attacked and almost killed. The man who attacked me was picked up by police in under an hour. He was covered in my blood, had my money in his pockets, and then he was acquitted by a jury. Over 80% of us will be touched by violent crime in our lives. And of those, 1 of 5 will receive justice. I know it's crazy, but the majority of violent crime in America is not solved. So what happened to me could happen to you, or God forbid, to someone you love. Why is it so damn hard to call for help when you're in crisis? Why, if you do manage to unlock your phone, dial 911, do most first responders got no idea where you are? Why do they have to ask a series of questions to understand your emergency? And if they do understand it, it can still take up to 10 minutes to get help. If you call 911, it's one of the most critical times of your life. Seconds count. We have a rare window of opportunity to change this paradigm. People are hungry for criminal justice reform and social change. People are tired of our institutions not bringing them justice when there's racial killings, there's school shootings, and people do not feel safe in their communities. The technology we need to solve these problems already exists or it's maturing. Zeer leverages emerging technologies like blockchain for the common good. And there is $15 billion in the federal infrastructure pipeline for next generation 911. And with CityCoins, we can distribute Zeer to all the cities in America that are Web3 friendly. All you have to do is touch a button and Zeer live streams your audio, video, location to first responders and your loved ones. Simultaneously, it saves that data, that evidentiary data, to the Stacks blockchain so no one can dispute your story. Web3 is the disruptive technology we need to solve crime. It creates the strongest chain of digital evidence on the planet. Why not? We have 50 small colleges in and around Philadelphia in our pipeline. These schools do not have a safety technology solution, but are looking for one because they feel pressure from parents and students. Sexual assault is still a huge problem on our college campuses. This is one of our go-to-market strategies. Because when Zeer works in a colleges for what it was built for, it can scale to the small governments we are already speaking to. We are already speaking in Newark, Delaware, Delaware County, Pennsylvania, and other municipalities. But this is just our B2B model. The additional revenue stream comes from our B2C prevention model. We build and execute prevention features, not just response and prosecution for our end users. Because there's one thing we have learned in the last year is people would love to put away their attacker. But what they would rather have is not to be hurt in the first place. Beta is live for both the B2C and B2B markets. Here you can see what happens if I say my safe word, beta trap. Zeer live streams this audio, video, and location to my loved ones and 911 call centers and campus security officers. Zeer also saves this data to the cloud where it is hashed in real time, and that hash is saved to the Stacks blockchain, creating the strongest chain of digital evidence ever. We have signed over 5 LOIs with some of the companies you've seen here today. Together, we are going to cross-promote our products in both B2B and B2C markets. I have also signed LOIs with safety influencers, college rape prevention companies, and other stakeholders. And CityCoins is going to help us distribute throughout the United States. This is my founding team. They're an amazing group, backed by experienced legal, marketing, and technology advisors. Tam White Conra, my co-founder, has been in 4 startups with successful exits. John has 40 years of experience selling innovative technologies in Sacramento, California, and other state governments. Today, we are raising because every day that passes, more people are going to be hurt. 6 years ago, my life changed. It's never going to be the same. I was in a coma for a month. Everyone thought I would die. The purpose of my life now is to stop this from happening to you or your family. I can remember nothing from the attack. He said the police planted the evidence on him. Maybe. But had Zeer existed then, we would know who did it and they would still be in prison. And Web3 can help us do this. The future of 911 is being written. Let's be sure that we work together to be sure blockchain is in that conversation. Thank you very much.
Thank you very much as well, Adam. And thank you to all of our startups today for the outstanding presentations and those of yesterday as well. Next, we're going to go ahead and move into our breakup rooms. But before we go, make sure you scan the QR code, click the link to schedule one-on-ones, not with just the startups that presented today, but those that also presented yesterday as well. A big congratulations and shout out to every single founder and team that presented over the last 2 days. It's been 3.5 months of hard work that all of them have put in from around the world. Thank you for all of your dedication, your belief in Stacks, the Stacks ecosystem, and the Stacks Ventures team. Thank you as well to the community. Now, if you haven't used breakout rooms before, down at the bottom of your screen, there's a little button that says breakout rooms. Go ahead and click that. and you can pick a room to join any of our founders in today as well. Feel free to reach out to Trevor, Andrea, Kyle, and or any of the other team members at stacks.ac. And also, again, click the link to schedule one-on-ones. And with that, we're going to take a break and let you all jump into breakout rooms and join with the founders. A big thank you to everyone again. Make sure to follow Stacks Ventures to keep up to date with what we're doing and with what all the teams are doing as well. Enjoy the breakout rooms, everybody.